All right, welcome everybody. All right, let me get this thing going. I will start sharing my screen. We'll get rocking and rolling here. Let me get back to my screen here. There we are. All right. So we've got a bit of a drop today in the crypto market and in the stock market as well, for the most part. Everything's a bit red. I haven't really checked in on the news to see what's going on. We just continue to kind of keep churning, after that big drop to 60K with Bitcoin, we're just kind of pinging back and forth between 60 and 70. So hopefully we resolve that. Really, since the beginning of February, during that big crash, we've been just kind of going flat slash sideways slash slightly down. So if we look at this in, where we've been, right, it's similar to we had this big crash, then we go sideways for a little while to consolidate, and then we had a big move down here, huge move down, like record. I think it was like one of the 10th biggest liquidations ever on Bitcoin and all the others. And then we're kind of just doing the same thing we did here, although we had a bit more measurable of a bounce, whereas here we just kind of keep churning downwards a bit. Had a bit of a move yesterday up to 70K from 64, big amount of short squeezes, right up to the 70 mark, and then people hit that 70 liquidity, dropped it down. So, we really need to bounce here soon. Because we're probably just going to keep going sideways. And if we get another big ugly sell off, then, we could go back and revisit that 60K level. But not all hope is lost. Let's take a quick look. Truflation's at 1.35. We've got a pretty decent jump from the lows of, if you look at the last month, we had a low of 0.67%. So we really have bounced up a bit from that, but still under the Fed 2% target compared to what they think it is, which is 2.4. And the fear and greed index for Bitcoin is now 11 out of 100, still super, super low. But if we look at the last 7 days, we'd actually hit I think an all-time low or matched an all-time low on the 23rd of 5. And that's pretty wild. In fact, we hit 6, which was that big drop all the way down to 60K. And then we hit another 5 on the 12th and a 5 on the 23rd. These typically, when you hit 20 or when you hit 5, doesn't mean you've hit bottom, but it does generally mean you're like the risk reward to slowly add in some Bitcoin over time is usually good. Now, granted, with that said, we're still here at 66, 67,000. There's still a possibility zooming out that we could break down through 60 and then revisit 50, either as a low or worst case scenario, in my opinion, we go back to that 38K level and we just do a full ugly, full bull, bear cycle all the way through October, let's call it. So, another good 8 months ahead of us to see how that resolves. Now, let's go into some news and see what's going on and affecting us. So, if you spend any time on X, which I certainly don't because I find it to be mania, but a lot of crypto talk about Jane Street. So Jane Street is one of the biggest market makers in the world. This is from the 25th. So what was that yesterday? Bitcoin bounces to 66K as rumors swirl over Jane Street's selling algorithm. So the new, word on the street is Bitcoiners are debating the Jane Street 10 a.m. price slam. So each day there's this 10 a.m. nuke that people have kind of noticed each day, and they're going, what is going on here? So the theory circulating on social media revolved around secretive quantitative investment firm Jane Street, now subject to legal action by the defunct crypto company Terraforma Labs. So that was the maker of the Terra Luna ecosystem that imploded in 2022. So coordinated algorithmic selling of Bitcoin at 10 a.m. Eastern Time daily, it alleged, the lawsuit, provided the main impetus for months of Bitcoin price downside beginning on October 2025. So this is a whole thread on this. But yeah, what happened today? Jane Street was exposed for massive manipulation of the crypto market. Granted, this is one person's opinion. This is not, validated just yet. An insider leaked that they were forced to shut down their trading algorithms. No 10 a.m. price slam for the first time. Blah, 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 blah. So amid the ongoing legal proceedings, Jane Street may have been forced to suspend its trading strategy, leaving the market to adjust higher. So if if people try to find oversimplistic, reasons for everything, not just in markets, but in everything. So the 10 a.m. argument, meanwhile, failed to convince many, and the crypto YouTuber Wise Advice was among them, suggesting the theory was far too simplistic to be valid. I think so as well. So the real coordination here, not coordination, one of the reasons that we're seeing these big ugly drops is very thin liquidity. We've talked about this over the last couple of weeks, is that liquidity is very, very thin on crypto right now, and we need that to come back in. So Keith Allen, co-founder of Trading Resource Material Indicator, said that a razor-thin order book on exchanges had contributed to this recent price rebound up from 63, 62, somewhere around there. Overhead sell liquidity, he told his ex-followers, had been pulled in advance of Trump's State of the Union address, which I actually haven't even looked at yet. So, to further on this, here's some kind of interesting observations from yesterday. Bitcoin's up almost 9% since Jane Street got sued. Also, the dump, which used to happen after U.S. market open, has stopped for the last 2 days. Probably a coincidence. So this is kind of an interesting chart, is that down, 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 10 a.m. slam each day, Jane Street lawsuit, and then we just kind of have a big run. But it could also be, again, that the market is just pricing in, hey, here's this narrative. Jane Street's now no longer manipulating the market. And so everybody goes, buy, 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 right? And then you get this big short squeeze. So that could be a self-fulfilling prophecy as well. Same here. Yesterday, Jane Street got sued. Today, the 10 a.m. manipulation stopped. Bitcoin to ETH started pumping again. This is from 2 days ago. So let's move on to where we could be moving forward here. Bitcoin traders explain why 80K is the next target for bulls. I would love to see that, because then alts are going to follow as well. So Bitcoin tapped 70 grand during Wednesday's New York session as the bulls targeted sell liquidity. Bitcoin price must hold above a key trend line at 68,000 for the rebound to continue. As you can see, we're now under that. We're at 67. So we really got to get back up above that. So let's continue on here. 80K is a key level to watch as the next big liquidation cluster above. So if shorts are getting too confident, that can create some big squeezes in price. And where did I have that? There we go. Yeah. If we take a peek here, we can see that over the last 24 hours, we've had about 300 million in shorts. It was actually quite a bit more when I got up this morning, but of course now we've passed that 24-hour mark. But yeah, over the last couple of days, we've had way more shorts get liquidated than longs for once, which is nice when we see that kind of rebound there. So Bitcoin must close the week above 68,000. So that's kind of the key to watch this week, folks. This is just above the 200-week exponential moving average, which is currently at 68,338. Rect Capital spotted Bitcoin facing resistance from this trend line, saying that the latest recovery could turn into a, quote, post-breakdown retest of the EMA into new resistance based on historical price action. The moment of truth is coming for Bitcoin. So basically, right here, and this is something that Brett actually had shared beautifully last couple days in, it was either here or it was in M3. I can't recall. In any case, yeah, basically we need to, it's do or die time really for Bitcoin. The only hope we have for this just being like a bigger drawdown than normal, and then maybe crab walk for a while and then recover, is we really got to recover this 200 EMA. If this fails, then we're just continuing the bear market. It's kind of how we're going. So Bitcoin needs a weekly close back above the EMA to flip it into new support to go against the grain of history. And I think we're still in a bear market, until proven otherwise, right? So this is interesting. The first real strength on Bitcoin since prices were over 90,000. Let's see if the price can turn the 4-hour 50 EMA into support here. So we'll see if this kind of holds it. Right now, we're just right at that level, as a matter of fact. It's about 66,900. So we're right there at this exact moment in time. So will liquidations drive Bitcoin price to 80,000? So a lot of people are very, very short right now. And this is kind of interesting. So CoinGlass says the Bitcoin price showed Bitcoin price tapping the liquidity around 70,000. Bulk of interest still clustered above that price. About $2 billion in ask orders are sitting between 72,475. So there's quite a bit of liquidity there that we could go up and snatch before turning back around. That'd be nice. I'd love that. If the $75,000 level is broken, it could spark a liquidation squeeze, forcing short sellers to close positions and driving prices towards 80,000, the next major liquidity cluster. So usually in these bear markets, things don't just go straight down forever. Usually there's some kind of, even if it continues going down, we get some kind of relief rally along the way. It very rarely just falls straight off a cliff with no rebounds. I mean, if we look at the last bear market in 2021, down, 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 a little bit of rebound, down, 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 rebound. We get some rebound. It doesn't just go straight all the way down to the bottom. It drags this thing out for quite a while. So that's kind of where we're at as far as this part of the cycle. So we've had some pretty aggressive down moves. It would be pretty surprising for this just to shoot straight on down without some kind of sideways crab walk or increase from here, just to provide more upside for that to go down again, right? So again, we're still in a bear market until proven otherwise. Now, and let's see. Okay, we talked about that. Unless there's a catalyst to drop, I'm expecting these higher levels to get run in the next few weeks. So unless something really bad comes out in the news or whatever, then we could be looking at more upside. So the spot Bitcoin ETF flows support or inflows support Bitcoin's upside. So the last 5 weeks, the ETF flows have been negative, 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 negative. It's been the worst we've seen in ETF outflows in quite some time. So that just reversed this past week. So investors poured a total of 765 million into spot Bitcoin ETFs just on Tuesday and Wednesday, with 507 million flowing into the funds on Wednesday, the largest since February 2nd. And if we keep going back to this chart here, you can see $500 million flows in, and that's what creates this, right? So that's quite a bit to see in that move. That's what we like to see. Now, ETF inflows and short liquidations are doing the heavy lifting. This isn't retail FOMO, it's institutional accumulation with a technical breakout. Whales are buying the dip. Just in the last 48 hours, 2% of the Bitcoin supply was bought between 60 and 70K. Yeah, basically $25 billion added to long-term holders' bags. Hundreds of fresh wallets have bought over 400,000 Bitcoin collectively. Regardless of where Bitcoin goes from here, this is bullish. So as long as these people don't reverse and sell, that's good news for us. Now, let's continue on here. The ETFs gain momentum, like I said, with $500 million inflows just yesterday as Bitcoin reclaimed 68K. It makes sense for us to have a little bit of a pullback here, considering we had a pretty decent day yesterday. I mean, really within 2 days, we went from 62.5 to 70, right? So it would make sense for some short-term people to take their profits. We come back down here, maybe 65, 64, and then hopefully turn back around from there. So let's continue on. Yep, so we've talked about this. ETFs are nearing a potential first week of inflows after 5 weeks of net outflows totaling 3.8 billion, with weekly inflows now around $500 million. So we had almost $4 billion exit ETFs the last 5 weeks because it's been a pretty damn ugly move. So now hopefully this is a return back to inflows. The gains mark 2 consecutive days of inflows, hinting at a possible upside following a massive February sell-off that wiped out $20 billion in total net assets. So the Jane Street ETF controversy adds to mounting paper Bitcoin concerns. We've kind of talked about this in the past. The renewed buying comes from as some investors continue to debate how market structure affects Bitcoin price discovery, including the role of big market-making firms like Jane Street and authorized participants, APs, that help create and redeem ETF shares. So basically, is the Bitcoin hard 21 million cap now not in effect anymore, essentially because people can use paper derivatives instead of having to buy and move Bitcoin on-chain? So question, quote, the answer is trickier than the question, Bitwise advisor Jeff Park noted in an X post on Wednesday, adding, but it's also more structurally unsettling than the conspiracy theory itself. And once you understand the actual mechanics, you won't be able to unsee them. So basically it's saying that Jane Street has been accused of influencing prices through derivatives exposure and market manipulation. So the short answer is that no authorized participant explicitly suppresses Bitcoin price, Park said, stressing that it's rather the integrity of the price discovery mechanism that the AP structures that can suppress. Those are not the same thing, but the second is arguably more consequential than the first. So, the idea of now there's more than 21 million Bitcoin is kind of bullshit, but you've got dumb stuff like this, like the debate intensified recently after a mishap at South Korea's Bithumb exchange, which mistakenly distributed 620,000 Bitcoin it did not hold. Well, I don't know how that really works because you can't really send out Bitcoin you don't own, because it won't be validated on chain by miners and by node operators like myself. So let's talk about the Clarity Act. We've really got to get this thing across the finish line here. So the OCC proposal seeks to settle stablecoin yield debate, clearing the way for clarity. I don't like how this came out. The U.S. Office of Comptroller of the Currency, OCC, has dropped a 376-page proposal to implement the guiding and basically the Genius Act that looks to settle the ongoing stablecoin yield fight. So right now, the only thing holding the market structure clarity bill back is this argument over interest. And the Genius bill already says that stablecoin companies themselves cannot provide interest to holders of stablecoins. That's already done. And so the OCC is trying to say, hey, we want to use these same rules, but for exchanges and companies like that, to where of course they can't just airdrop interest in your account if you own a stablecoin, because that would basically break the law about Genius. But they're also trying to say that we're just backing the banks here, and that any kind of interest paid out, even if it's like over rewards or taking actions or something, we're not for that. And I think that this is going to cause even more delay, unfortunately. So supervised entities would be barred from paying any form of interest or yield, whether in cash, tokens, or any other consideration solely in connection with the holding, use, or retention of a stablecoin, a payment stablecoin consistent with the Genius Act. So they're basically saying, hey, to get this thing across across the goal line, let's just use the same information we have on the Genius Act, which is that nobody gets to use interest at all with stablecoins and get it done. People like Coinbase, Kraken, so on and so forth, they're going to fight this because that's basically saying you're not allowed to compete with banks. And I think that's bullshit. So the OCC's draft rule translates the statutory framework into operational constraints, including tight limits on how Genius regulated issuers can structure economics around stablecoins. This is literally the last thing here. This is the last hill the banks are trying to die on. The proposal goes a step further, adding a rebuttal presumption that an issuer is violating the ban on paying yield if it has an arrangement to pay yield to an affiliate or related third party and an entity that pays yield to the holders of the issuer's payment stablecoin. Basically, they're just trying to say nobody gets to do anything with stablecoin rewards at all. The only way you can get a yield is if you have a traditional bank account holding actual fiat dollars and not stables. The proposal also draws two explicit carve-outs. It is, quote, not intended to prevent merchants from independently offering discounts by using stablecoins. So if you want to go to Walmart and Walmart offers you 2% to pay with stablecoins instead of a 3% credit card fee, they're welcome to do that. And it does not bar an issuer from sharing profits from the stablecoin to a non-affiliate partner in a white label arrangement. So kind of small carve-outs there. What the proposal means for Clarity and Coinbase. By using the Genius interpretation to prohibit yield at the issuer level, the banking side of the framework effectively establishes a no yield baseline for Genius compliant stablecoins. So basically, it's saying only the banks get to do this. Coinbase does not. Kraken does not. Binance US does not. For Coinbase and similar companies that have argued they should be able to offer yield on stablecoin balances while operating within a fully registered US framework, the message is clear. Stablecoin yield and Genius compliant OCC supervised stablecoin payments are being put on opposite sides of a regulatory line. So this is going to delay us even further, unfortunately. And I just find this to be so completely anti-competitive that it gets under my skin. Any case, from Bitwise, Wall Street is bullish on crypto while investors remain skeptical. I love this quote, and I'll get to that in just a second. Quote, this is from Matt Haugen, the Bitwise investment chief executive. Everywhere I look, Wall Street is screaming that finance is moving on-chain. Not a little of it, all of it, he said in a note on Tuesday. Yet, traditional investors cannot hear it. They're not hearing what Wall Street is doing. He argued that investors are suffering from anchoring bias and are still fixated on how crypto was perceived in its early days, that when it was still an unknown technology mostly used by cypherpunks and dark web black markets. I love this. They look at crypto and still see a punk skateboarder with tattoos. They don't realize he's shaved, put on a suit, and deploying infrastructure that will underpin the next generation of capital markets. Crypto investors have not registered the shift. Now, of course, people like us get this. But the traditional people who are buying the IBIT and buying the ETFs that are new to this, they don't quite get it yet. They're suffering from the boy who cried wolf syndrome, he said. They've heard the promise of institutional adoption so long that they no longer register it. Get this, the value of tokenized assets on blockchains, such as treasuries and commodities, has quickly begun to approach $20 billion, more than quadrupling over 2025. Look at this chart. This is real world assets going on chain. So granted, this is not Bitcoin, this is not so-and-so, but this is like, real estate titles, this is T-bills, this is money market funds, this is commodities, institutional alternative funds, private credit. I mean, you look at this, most of it, like a huge majority of it, at least half of it is treasuries, right? That's amazing. Commodities are another big jump. Institutional alternative funds, another big jump. Private credit is another big jump. And then much smaller non-US government debt and others. But boy, just look since 2024. I mean, good Lord. I mean, I keep saying this. I can't even remember what year we started Retire Rich. Was it 2022? Brett was the first one ringing the bell on real world assets. And just look at this chart. I mean, he was back here saying we got to pay attention to this. And it's just ramped. I mean, from, under $1 billion to 20 billion in 3 years is pretty remarkable. So the numbers in question are enormous, he said, adding that hundreds of trillions of dollars floating around in exchange-traded funds, stocks, and bonds mean that the tokenization market can still grow 10,000x and have room to grow. So the question is, and we don't have an answer for this, but how can we profit from this? Because so far, it's not like an individual crypto token has benefited from this, right? It's just those using the crypto rails to put real-world assets on here. So we're going to have to keep an eye on that for an investment thesis we can go with. Because that's not turning around anytime soon. Now, Haugen added that BlackRock and credit manager Apollo have launched tokenized funds on-chain worth billions of dollars, and major banks JP Morgan, Bank of America, Citigroup, and Wells Fargo are in talks for their own stablecoin. There's a large delta between what people think is happening in crypto and what is actually happening. From where I sit, this gap creates a significant opportunity, not to try to pick winners prematurely, but to build the broad exposure to the space while the market is still mispricing the structural shift. So the fact that we've still got Bitcoin at 67 grand and altcoins in the toilet, that is a material mispricing of where we'll be in the next couple of years. Now, moving on. Okay, I've actually covered that. Wall Street. Yeah, here we go. So I thought this was pretty interesting just to see how these things are evolving. So the banks say no yield for you, but then you've got Telegram building an in-app crypto wallet to offer DeFi yields on Bitcoin, Ether, and Tether. So messaging apps are going to start getting in this game as well. And pretty soon, everything's going to have a wallet attached. And eventually, it's all just going to be seamless in the background based on your private key. So the update introduces vaults on the Ton wallet, a self-custodial wallet integrated within Wallet in Telegram, enabling users to hold, send, and earn on Bitcoin, Ether, and Tether without leaving the chat interface, according to a Thursday announcement shared with Cointelegraph. System runs on a DeFi infrastructure provided by lending network Morpho, the Ton ecosystem's executive layer, TAC, Ton's applications chain, and strategy provider RE7. Now, I'm not familiar with any of these, actually. I'm familiar with Ton. I'm not familiar with Morpho or RE7, so don't go and throw your whole stack in here trying to aim DeFi yields. But it is interesting to see this, right? Because it's only a matter. If Telegram does this, then there's going to. Telegram was really early to this to create their own token, their own blockchain, so on and so forth. And so it's only a matter of time until everybody has their own native one. Telegram aims to simplify DeFi earning. The goal is to make earning on crypto easier for everyday users by removing the technical steps normally associated with DeFi services, like having a networking, bridging, external apps, so on and so forth. The vault strategies generate variable returns and allow users to keep control of their funds through self-custody. That's important. The announcement said the Tether vaults offer dollar-denominated earning strategy with different risk levels, while Bitcoin and ETH vaults extend the same functionality to two of the largest cryptocurrencies. Ton launches a crypto payment toolkit for merchants to integrate all this stuff as well. Earlier this month, the Ton Foundation introduced TonPay, a payments software development kit that lets merchants and Telegram mini app developers accept crypto directly within their Telegram app. Look at this. The fact they grew is bonkers. Telegram significantly increased its operating revenue in 2025, reporting $870 million in the first half of the year, a 65% increase from the roughly $500 million a year earlier. That's amazing. Roughly $300 million of that revenue came from exclusivity agreements tied to its associated cryptocurrency, Toncoin. So that's pretty nuts to see it. Now, what would be curious is to look and see, I'd be curious. I've not followed Ton. I don't even know if you can get Ton in the US easily. I'll have to look. Let's go. Oops. Ton USDT. How about that? Yeah, let's take a look at Ton. I'm sure Ton's on the toilet with everything else. Go back to the daily. Oh, yeah. Ton has gotten just massacred, right? So it's tricky to hold some of these utility tokens. It's down 82% from its peak back in August and December. So pretty rough go of it if it's down 85%. Let's continue on here. Now this was interesting. So if you guys have been following the AI narrative, the amount of interest in AI agents, specifically through the development of a program called OpenClaw, which is an open source project, it's just remarkable. The amount of agents being deployed across the internet and across the web on hardware is amazing. So this is pretty interesting. Blockchains may need 1 billion transactions per second to support AI agent future, according to Stripe. And before I forget, because it's not included in this article, I believe it was Coinbase is actually now rolling out their own thing on Base Chain, which is a whole new framework just for agentic payments using stablecoins at supersonic speeds. So that's pretty cool. Anyway, one of the key talking points from the Stripe CEO and co-founder was the adoption of AI agents and widespread use could look like in the future. The duo, basically the two co-founders, argued that blockchain transaction activity could increase significantly as AI agents gradually become the primary conductors of online transactions. So when you think about billions and billions of AI mini agents doing transactions, from paying to services to, buying their own tokens to, you name it, they need to have their own kind of network layer fabric across the entire internet with super fast speeds so they can do this in computer time rather than human time. There's a significant infrastructure gap in the blockchain, and said that significant scaling improvements would be required to meet this incoming demand. So last year, a meme coin trading frenzy on one of the major blockchains delayed payouts for one bridge user by over 12 hours and spiked per transaction prices 35x. While such operational issues are already significant, these will only intensify for what we expect the appetite for transactions to grow to and grow a great deal. In our view, agents will most likely soon be responsible for most internet transactions, and we will likely need blockchains to support more than 1 million or even 1 billion transactions per second. So this is going to be a really tricky thing because you can't really do that kind of speed without centralization. And so that's going to be a very tricky thing. According to data from ChainSpect Internet Computer Protocol, which Brett's been talking about a long time, and Solana are currently the top two blockchains by transaction speed, with roughly, let's call it 1,200 and 1,140 transactions per second, respectively. There are only two on the market currently that process more than 1,000, or they are the only two that process more than 1,000 transactions per second. And at their peak, they've processed 25,621 transactions per second and 5,289 transactions per second. So I guess these are averages and these are peaks that they've done. As it stands, both networks have a theoretical maximum of only 209,000 transactions per second and 65,000 transactions per second, respectively. And if we're looking to get into millions or billions, we got a long way to go. So AI commerce is past the hype phase. Currently, the AI agents have moved beyond the phase of pure hype into a time of building real-world experimentation. The first two levels of this include completing web forms in descriptive search. We've already done that. The next three levels include persistence, remembering user information requirements and preferences, delegation, handling tasks like grocery shopping on your behalf, and anticipation, being able to provide solutions to problems or schedules without being prompted. So just fully, completely autonomous instead of, hey, it's me, Mike, agent, go do this. And then it goes and does it. If all goes well, the little creatures won't be cooped up in walled gardens, but will be zooming down the open, wide protocol highways. And I think that's a pretty fun idea. Now, two more, and then I'm going to hand it back over to Brett. We've got to pay attention to the options expiry coming up this Friday. Bitcoin's upcoming $10.5 billion options expiry may end the bear market. Here's how. Now, again, I don't think so until proven otherwise. I think that it's still a bear market until proven otherwise. So Bitcoin bulls need a 9% rally from current levels to take advantage or take the advantage in Friday's $10.5 billion options expiry. A 90% correlation between Bitcoin and the NASDAQ 100 index shows that tech investor sentiment is driving market confidence. So Bitcoin price surged to an 8-day high on Wednesday, successfully forming a double bottom near 62,500. Despite these recent gains, Bitcoin's price remains 21% lower than it was 1 month ago, suggesting that bulls are unlikely to come out ahead during Friday's $10.5 billion Bitcoin monthly options expiry. Deribit remains the dominant leader, 76% market share, which is crazy, following or totaling $4.5 billion in call buy options and $3.4 billion in sell instruments. Put options are better positioned despite having less open interest. Even when discarding calls targeting 105,000 or higher, which are typically part of a complex multi-leg strategy with lower acquisition costs, only 37% of the remaining bets sit below 75,000. Realistically, this puts the effective call options open interest on Deribit at about 780 million. These numbers are just nuts to me. Given these current conditions, it's worth analyzing whether bearish traders now have overplayed their hand. So nearly 1.5 billion in put options, open interest on Deribit, targets Bitcoin prices below 60,000, although it's unlikely that bets at 40 and 45,000 effectively aimed for that specific level. The success of the AI sector, particularly sustainable operational margins of the world's largest companies, remains decisive for every risk market. So basically, they're saying, the little mini panics that keep happening in the market because of AI fears, we need it to all turn around for crypto to kind of come back. We can't have any doubt of the AI market because so much is riding on it. So history suggests Bitcoin's correlation to the stock market seldom lasts long, but the fate in Friday's 10.5 billion options expiry could be decided by the stock market performance. Below are three possible outcomes for tomorrow's expiry based on current price trends from 65 to 69. This net result favors the sell instruments from 69 to 71, favors the sell instruments by this much. 71 to 74 favors the sell instruments. Ultimately, Bitcoin bulls need a 9% rally from here, from the present 68.8 level, which we're now under, to flip the tables on the February options expiration. So we would need about a 10% rally to get over all of these and be back in the good way. So Last thing I'll leave you with is Solana. This is from yesterday. It was leading a 10% gain yesterday. Is $100 next. Solana rallied 10% in the last 24 hours, rising to an intraday high of $86 on Wednesday, because that was yesterday. The recovery was accompanied by a leap in futures activity, with Solana's open interest rising by more than 5%, which is great. Solana recovered with the overall market. The global crypto market cap is up 4% on the day to 2.28 trillion on Wednesday. If I look at it right now, it went from 2.28. Okay, we're at 2.28 still right now. Which actually kind of, I don't know, we're kind of getting there. If we look at like where this thing kind of, before it took off last time, it was really in this chart right here. Now, granted, we could always go back and hit the absolute lows here, but this is where it was before, Trump got elected and then just ramped. So we've effectively gotten right back down, and we're right back to where we were when Trump got elected. Essentially, we're literally right there. So we've basically put in this, kind of call it a double top. I'm not sure if Brett would have to tell me if this forms kind of an ugly ass tilted head and shoulders or not. But in any case, it's nice to see a little bit of growth there. Solana surge today was accompanied by significant short liquidations. So it may not necessarily be, spot people buying rather than shorts getting liquidated. The buyers were also US-based Solana ETFs, which have recorded 40 million in net inflows since February 9th. The growing demand side pressure could push Solana higher, particularly if combined with increased inflows in the global Solana investment products and whale accumulation. So this is kind of interesting. So this whale spent 2.6 million to buy 121,000 Solana at an average price of $84. I can't imagine being able to spend 84 or 10 million bucks just making a quick little buy. That's got to be bonkers. The symmetrical triangle breakout targets 110. If it holds above that, which as of now it might be underneath it, price needs to close above the 100-day simple moving average at $86 to sustain the price momentum going upwards. Measured target of the prevailing pattern circulated, blah, 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 is $110, coinciding with the 50-day SMA. This represents a 28.5% rally if we were to go back and retest this. So we'll see, but, I don't know. Still, bear market until proven otherwise. As Cointelegraph reported, a daily candlestick close above the 20-day EMA, currently $88, could open the way for a price rise towards $95 and then later to 117. And if we look at where we're at right now on... Where did my page go? If we look at Solana, we're still at, where is this? There we go, $85. We're under the 88. Yeah, so we had that little bit of a run here, and then we're just still in this kind of sideways consolidation for now. Let's just hope that we stay in this consolidation and we just go crab walk for a while to put in a floor, and then we can move back upwards, rather than just kind of falling right out of this. So anyway, no real short-term plans there. I'm just still in kind of wait and see mode and see how this goes. But I think that's all I've got for you for right now. We're just still in wait and see to see how this is going to resolve.